See what live here. Live. Click on the live YouTubies. Come on, show me. That's 6 days ago. Come on. Not coming up on YouTube yet. Both of them say 6 days ago. You can click on them and trying to refresh it here.
I'm gonna. It's not. I'll pause the recording for just a sec. Don't let me forget when we start to
Okay.
keep that back up. Let's see. Yeah, according to this, we should be live streaming to both of them. So maybe it's just going to take a second. I don't have the best internet connection, so that could be part of it. Although
All
I
right.
am
Mine
on
says
Starlink.
live. And come on, update. I gotta change that picture somehow or other. I ended up with my face on there instead of a Bank on Purpose deal on there. I'll have to figure that out. Come on, click. Go. Mine says live. I'm just trying to get yours to update here.
If yours is done, if one is, they both are.
All right. I'm trying to click it here.
Which anybody that joins us today on YouTube or YouTube, those lives, go ahead and let us know, and we can send you a link to get on Zoom here with us so you can be live and ask questions and everything.
Let me get rid of this. So that Read AI kicked back in again. That's an automatic thing, I guess.
Everybody a second or three to jump on if
Can you
you
bump that Read AI again there, Jody?
do what?
Bump that Read AI button.
Is it back on or something?
Yeah, it came back up. I did I just put a hide non-visual participants. So
Do what?
I told it to hide the non-visual
Oh,
participants.
cool.
At least on mine. I don't know if it shows up on. Looks like on the YouTube, it's also gone.
Sweet.
Awesome.
Which is what we want. Sweet.
Okay, we're ready to. Let me get back over on the document here.
To everyone, we will be starting the podcast soon. I'm Jody. This is Bill.
At Texas Bill Pace and Jody Ogden here.
Yep.
Bank on Purpose podcast.
And our mission is to help you align your money with your purpose. We help you learn how to make your money work harder with purpose and, of course, safely.
Okay, today we have a special episode, super important. How to protect your investment like a bank.
Yep. We'll be breaking down promissory notes, deed of trust, insurance, and first position lending into clear, simple terms too. We'll run that out to where you should be able to understand it pretty easy. So let's go ahead and start. Bill, what is a promissory note?
Promissory notes, it's a written piece of, it's written on paper. Someone says, I owe you money. I'll pay you back when time, with this amount of time and this interest. Borrowers, it's legally binding, written promise to repay a loan to a lender, including specific terms like how long and how much interest and that kind of thing. Loan amounts, interest rates, and repayment schedules. So that's where we are with that. Okay, and Jody, what is a deed of trust anyway?
So the deed of trust is like magic paper that says if the borrower doesn't pay back, you can take the house. It holds the promise safe, while a mortgage or a deed of trust creates a lien on the property to secure the loan. The promissory note establishes the borrower's personal obligation to repay the debt, allowing the lender to pursue legal action if payments are missed. And so, Bill, what, excuse me, why do I need insurance on a property?
Well, insurance is like an umbrella. If a big storm comes in, fire breaks in a house, you're still safe because insurance is going to pay up. So even if something big happens, you're still covered.
So basically, if they were the lender on the house and the house caught fire, then the bank pays their lien off, right?
It's gonna pay off whatever you owe on the house until you get to the point where it can pay off.
No.
Just like a bank, bank's not gonna let you have it without having insurance on it either. So it's the same thing.
Yeah.
So let's see, what does first position lending mean?
Well, so that means you're very first in line to get paid back from the house. It's like having the best seat at the table. In real estate, the first position lending refers to, excuse me, a loan that has the highest priority or claim on the property, ensuring that the lender gets paid back before any other creditors or lien holders if the borrower defaults. So if the borrower stops paying, if you're the first in the first lien holder, you're first in line to get paid back over everybody else. And so what is it and who holds the note, Bill, or the deed of trust?
Well, the note or the promissory note, sometimes it's called, is typically held by the lender who provided the loan. The deed of trust or the mortgage is held by a third-party trustee who acts on behalf of the lender. It's the title company and property, or a legal lawyer or title would hold it for you. And then title refers to legal ownership of the property, and it's usually recorded and held in the county recorder's office. So that's your official with the county. So what if the borrower doesn't pay me back as a lender?
Well, because you're first in line, you get to decide if you want to sell the house or let someone rent it or to get your money back. So this is distinct from an unsecured loan like a credit card where you can't seize a specific asset like on an unsecured loan. But because of the mortgage is secured, the property itself serves as collateral. So you get to decide whether you sell it through a realtor and get your money fast and probably a little extra and or some extras and whatnot, or if like you said, you want to rent it out or whatever to get your money back. So there's multiple exit strategies for you to get your money and probably profit more on it by having to go through that extra loop. Hopefully you never have to, but that's part of the security in it. So Bill, how is my money safer than stocks?
Oh, with stocks, you might lose money if a company goes bad or they have a bad year or COVID or something like that comes up, and then things just get critical with a company. So if real estate, you always have a house as a backup. It doesn't have just vanish away intangibles, like, all your people went away and had to go to the hospital. So so you lost all your money. So tangible assets, you have an investment in real estate, you own a physical piece of property such as land or building, unlike stocks, which is intangible, the digital assets. So do I need to understand all the legal terms there, Jody?
You know, Bill, not really. We explain everything in plain words so you feel confident before putting any money in. But you should always have your legal advisor review before signing anything. I don't care what document that is. That's just a common sense deal. You want somebody that understands it to look at it. But we're going to explain it all in the basic terms, whatever you need to know. And of course, if you ever have any questions, just ask us. So what if something breaks on the property, Bill?
Well, let me ask you this, on a house that you own or rent, do you call the Bank of America when your roof leaks or you have plumbing that's clogged? Probably not. The lender, as you as a lender are the bank. They're not going to call you to fix the roof and not going to call you to fix the toilet. So you're a lender, you're just like Bank of America. You're going to be protected in those kind of ways. So nobody, major problems such as a fire, that's where your insurance comes in to cover your, and just like a bank on a house, they're not going to let you have a bank note without having everything in escrow so that you have things that are that the bank knows, and you know, as a lender, you would know that the bank and the insurance is paid. So that's why we put everything in escrow so that things are paid monthly and everybody's covered. There's no lapse. So how do these protections work in a self-directed IRA there, Jody?
Well, it works the same, only your IRA holds the note and deed. So you still get paid safely. The money grows tax-free or tax deferred. And you can see how each layer of paperwork, the note, the deed, the insurance protects your money. And that's what the main thing is, to keep your money safe while growing your money.
Yep. So I'm going to see how each layer of, okay, protects your money, and then see how the banks do it. Then, and that's how you can do it, private money lending safely and confidently.
Yep.
And to take this even further, we're hosting a 2-day event in Dallas, October
October
25,
25th and 26th. Yeah. Titled Bankable on Purpose, where we personally walk you through all of this step by step.
You have clarity on how legal protections work, confidence through case studies, live deal workshops, real life connections and experts and peers. We're going to commitment tools to get things started right away.
Sweet. Go ahead and secure your spot now, people, and align your money with your purpose. Let's learn, grow, and protect together.
Next week, we're going to have a special guest. Jamie Stone's an investor and a lender, and give us some insights on what he's doing, insights. And we're going to be pre-recorded, so we won't be live, but we'll put that out next week.
Yep. And then we got some upcoming episodes that we're planning, like underwriting unpacked and exit strategies and investment psychology and stuff like that. So if you know anybody that can use this stuff in their investings and stuff, that's what we're trying to do, is help people out. So again, this is Bank on Purpose, where we want to help you align your money with your purpose. Y'all have a great day.
Y'all have a great day. That's the end.